Hi and welcome to another episode of Monday Market Outlook. I hope everybody enjoyed their long weekend as we gear up for another shortened trading week in the PSEI. And just like that, the first 4 months of 2023 is over. Now let's look at how the PSEI performed during the past 4 months as we look at the monthly chart here. So unlike March where the market dilly-dallied and didn't really know where it wanted to go, April had a more definitive direction that the market is trending upwards. If we look at the weekly charts, we have a clear breakout of this very critical zone at 6,550 with the market ending the month at 6,625. If you look at previous breakouts from this critical zone here, we had 4 weeks of consolidation. Are we going to get the same consolidation pattern in the next few weeks, right? So if we look at the daily charts from last week, we did expect the market to retest 6,550 before making another attempt at its next resistance at 6,739. Now there's a soft resistance here at 6,650. Let's draw a line here. There's a soft resistance here, right? So if the market makes another move to test this and breaks out of that resistance, we have to assume that the market may be headed towards 6,740 in the next coming weeks. Last week's market performance was mainly driven by also good earnings from our Philippine companies. Aboitiz Power in the spotlight with record numbers, posting a net income of 7.5 billion, up 161% from the same period. Now, great performance from Aboitiz Power. Now, let's look at April's performance of our stock picks. We have Apex, clearly the winner here at 47%. So congratulations to those who were able to participate in Apex mining. Bloomberry at second, and of course we have the banks. DMCI and SCC are underperformers for April as we expected after its dividend X dates. We did expect DMC to SCC to experience a massive drawdown. So let's look at some charts here. AP, of course, we've mentioned time and again that AP is a good buy the dip stock. So far, anytime AP touches the 36.15 level, investors have been rewarded with a good upside potential. Now remember, our target price for AP is 42, but with its current performance, analysts are adjusting it to probably reach around 48 or 49 for the year. So let's discuss Apex. Right? Again, buy the dip strategy for Apex has worked for investors. Anytime Apex experience a dip, investors have been rewarded. No? So the same here. This is even a small dip and investors were rewarded. Same with Bloomberry. If you bought the dip at 865, even if you bought at 960, congratulations to Bloomberry holders if you were able to buy the dip during these times. Now Bloomberry pulling back to 1050 to end the week. Now remember, because of its momentum, we have to assume that any pullback for Bloomberry will eventually be met by buy demand, right? For SCC and DMC, as we expected, the breach here of its 29 support level has led us to believe that SCC is heading towards its next support at 27, and we are at that level currently. Now the question is, will this support level hold, or will SCC further break down of its 27 support and head towards its next support at 24? It's currently oversold, so it's due for a bounce. Now because of its weakness, we have to assume the opposite. Because of its weakness, we have to assume that rallies for SCC will eventually be met by sell demand. So there are a couple of things going for SCC. One, if you've been to Boracay, if you're based in the Panay area, you know that there is a massive energy shortage in those regions. There are rotating brownouts. The sound of generators humming in Boracay is not a very uncommon thing. SCC is poised to benefit from this energy shortage, only 26% of its capacity is contracted. We can potentially see a 45% revenue upside from its energy generation business, right? And the PE ratio of SCC is so cheap at 2.9 PE ratio. Ideal scenario for SCC right now is to bounce off from 27 to 29, and of course we have to assume that it's going to be met with sell demand, form a double bottom here, then eventually make its way back up so that it can try to fill this gap here back to 3240. So that's the ideal scenario for SCC. DMC also the same case. Now DMC, after breaking down from its support level at 1072, it is currently resting at another critical zone here. If we look at, see here, it's a resistance, support. Now it's a support level. Now if it breaks down from 980, we have to assume that its next support level will be at around 930 here, right? Okay, 930, 925 or 930, right? So watch out for DMC's reaction at this level. And again, any rally that happens here because of its weakness here, any rally that happens for DMC will eventually be met with sell demand. I want to look at a couple of charts here. We first have the dollar index chart. Now the dollar is the winning trade for 2022, right? But ever since then, the dollar has gone down 10%, 11% to its current level at 101.8. Now the dollar's weakness is mainly brought about by the recent intensification of the de-dollarization of the world economy. Previously, back in 2001, 73% of the world currency reserves were in dollar. Right now, that's no longer the case. Right now, the greenback only represents 58. The recent resurgence of the de-dollarization is mainly brought about by the BRICS currency. BRICS mainly stands for Brazil, Russia, India, China, and South Africa. So these countries have banded together to create an alternative currency to be used in international trade. All these factors have contributed to the weakness in the dollar. And of course, if we look at the dollar peso exchange rate, we may see our currency either trading along 55.50 to 56.50 or at the lower band of this range, 55.50 to 54.70. The de-dollarization is helping another commodity here. Let's look at gold. Gold has been on a tear since the start of the year. We've been harping on gold ever since December, and it has gone through a massive rally ending at around 1981 right now. If we look at the longer chart here, the main resistance point here is 2072, right? Now this for me really looks like a consolidation here before it makes a very strong move to challenge 2072. Along with de-dollarization, the expectations of a recession happening in the US and also the global economy has made the dollar a viable risk-off pure play for investors this year. So it's not altogether impossible to see the dollar reaching even up to 2,400 for this year. So how do we invest in gold? No, so we can invest in gold ETFs on eToro or on your global platforms, or you can invest in gold companies. And of course, that's where our pick, Apex Mining, really comes in. At 3 pesos, Apex Mining, fundamental, and given the prospects for gold at 3 pesos, Apex is very, very undervalued. So there's a massive upside potential for Apex in the coming years. Let's go to the S&P 500. So last week, we expected the index to move along this range. So this is the extreme zones based on the options expirations. First 2 days last week was brought about by the resurgence in banking fears, especially with the collapse of First Republic Bank. But better than expected earnings from Facebook, Google, Amazon, and other companies drove the S&P 500 towards its extreme zone here at 4180. So looking at May's options expirations, we can still see a lot of puts in the system, which is making it difficult for the S&P 500 to go down. If we plot the options extreme zones based on options here, we may see the market, right? So it's 4,000 and 410, right? So potentially we are looking at the market to trade along this range during May. Now, as mentioned, if we look at market breadth, a smaller number of stocks are outperforming the S&P 500. And if we look at the composition of the S&P 500, the top 10 stocks here are Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, and any movement from these index names will greatly affect the S&P 500. Now, if we look at their individual charts, we have Tesla showing a lot of weakness. Now, remember, as we said, we have to believe that any rally for Tesla will eventually be met with sell demand, right? Nvidia consolidating. Will its AI story provide further upside to Nvidia, right? Apple currently meeting a trendline resistance, a long-term trendline resistance. Google consolidating at this level also. Right? Microsoft also in a critical zone here. Amazon also encountering a trendline, long-term trendline resistance here. Meta also encountering some heavy resistance here at this level. So it would be interesting to see how these index names perform in the next few weeks. Going back to the S&P 500 chart, might make sense that the index may trade in a range. Now remember that the market is currently at a very strong resistance point here. Look, 418, bump, bump, bump. Could we see the market pull in investors, trap investors before going down to settle at maximum pain level at 405? So remember, next week on May 3, the FOMC will meet again to announce what could be the last rate hike for this year. The consensus is they're going to increase rates by 25 basis points to 5.25. Now, as to how long the FOMC is going to keep rates at 5.25 is going to be the point of speculation for the markets this year. A lot of people are saying that because of the credit crunch that the US economy is already experiencing, it may make a good case for the Fed to start pivoting by December. Right? So we'll see. So that's it for this week. I hope you enjoyed this episode. Please like this video, subscribe to the channel. Always remember, good luck on your trades, manage your risks accordingly, and I'll see you again next week.